Okay, so those were some of the top headlines that shaped the day of trade on Monday. Let's take you through some levels as well. And for the Nifty, we've managed to hold on to that 24,400 mark. In fact, 24,430 is where we shut shop on Monday, 0.6% higher and a good 160-point uptick on the spot. Sensex too closed with gains of about 0.7%. It was the broader markets that were more or less in tandem with the benchmark, because you had the Nifty small cap index that was higher by 0.5%. Mid cap index was higher by 4/10. So good move coming in from there as well. India VIX was absolutely flat, nothing to worry about over there. Nifty Bank has also seen some very good moves led by HDFC Bank and the very strong Q1 update that came over there. 0.6% higher for the Nifty Bank and a 350-point uptick on that note as well. Sectorally, you only had three sectors that continue to be in the red for throughout the trading day. That was Nifty Media, PSU Banks and Nifty IT, with cuts between 0.5% and 1% each on all three indices. What on the flip side did well is the Nifty Realty Index on some very good updates. The sentiment around the index has been strong for the last couple of weeks. It's Signature Global Brigade, Lodha, Phoenix that have done well from that pack. Following that, you had Nifty Auto, Oil and Gas, Metal, Energy, Defense, Banks, Pharma, Finance and FMCG. Within the Nifty banking pack, it's IndusInd Bank that saw uptick of about 4%. HDFC Bank was higher by 3.25%. Very good move over there. ICICI Bank 1% higher, and as was the case with IDFC First. So more or less, this is what the tilt of the market was in terms of sectors. From the broader end of the market, the Nifty 500 also looked, in fact, actually very even Steven, because you had 250 stocks in the green and 250 in the red thereabouts. So very split in the middle when it comes to that index. On the gaining end, you've got Aegis Vopak up 8.8%. Allied Blenders did well. You had Dixon, Zentech, Radico, Manappuram. All of these stocks have done well. And on the flip side, some pressure on Zensar Tech, Ola Electric, Varun Beverages, Jain Resources, Tejas Networks, as well as the Kotak Mahindra Bank. That was lower by about 4%, and that kept the Nifty banking index in check despite that 3% uptick that we've seen both on IndusInd and HDFC Bank. So in a nutshell, this sums up the trading day. All in all, a good start to the week. 0.6% higher for the Nifty and 24,430. So above 24,400 is where we've shut shop for the day. But while that's on the equity front, let's take it across to my colleague Sajid, who's joined us on the show with a quick F&O roundup. Sajid.
Thank you, Snee, for that. The Nifty closing about the 24,430 mark. Primarily led by shorts getting covered towards the second half of the day, and if you look at what's happening, a 1.4% decline in open interest, so that's the shorts getting covered there. Nifty Bank again ending higher, nearly 0.6% higher, and there the open interest is up nearly 1.73%. There's some long build-up which is happening in many of the stocks, especially private sector banks. If you look at the constituents of Nifty, HDFC, ICICI, AU Small Finance Banks, Bandhan, Federal also some long build-up, and there's some shorts covering that happened in SBI and IndusInd Bank there. Otherwise, the PSU Bank pack saw some shorts getting built at this point in time. The call and put ratio, it's more in favor of the puts. In the second half, you saw aggressive put writing that came in. Especially at strikes like 24,300 and 24,400 for the July 14 series. And if you look at the distribution, finally the Nifty 24,400 mark, where you have the puts have a majority position as compared to the calls, and there's a resistance which is coming in at 24,500 for them. In futures gainers, you have stocks like Dixon, where we saw some short covering coming in, 6.9% jump. Manappuram, saw a long build up, and Radico saw a long build up. All these stocks up over 5%, 500% in today's trade. Losers include Varun Beverage, Kotak Mahindra Bank, and Cochin, seeing some short build up there. Among the open interest gainers, you had stocks like Lodha, where we saw a long build up. Phoenix Mills is seeing a long build up, and PB Fintech is seeing a short build up in today's trade. Open interest losers include Bajaj Auto, short covering is seen there, and Novama is seeing a long unwind, and Dixon is seeing a short covering in today's trade there. So overall, the Nifty ending about the 24,400 mark, led by some shorts getting covered for the Nifty there, but the bank Nifty is also adding some long positions in today's trade.
Okay, thank you so much for that, Sajid. Let me go across to Meryl. She's here with some of the cues you want to keep on your radar for tomorrow's, which is Tuesday's day of trade.
Yes, coming to you with some of the important developments for you to track on the 7th of July. Now, starting first with India, do watch out for the weekly Nifty expiry, which is set to drive some volatility in the markets. Globally, all eyes will be on US reporting its trade balance data, while China will release its latest foreign exchange data, and Japan will be announcing leading economic indicators as well as labor cash earnings, which is going to be important to track as well. Now, back home on the corporate front, Rashtriya Chemicals and Fertilizers Board will be mulling a fundraising. And among global events, do watch out for the NATO summit, which is set to begin in Turkey, which will go on through till the 8th of July. Also, watch out for the Bank of England publishing its financial stability report. And finally, a landmark event for markets to watch. SpaceX is set to be added to the Nasdaq 100, which is a move expected to trigger significant passive fund inflows to the stock. Now, these were some of the important developments for you to track before the next trading session on the 7th of July.
Okay, Meryl, thanks so much for taking us through that. So yes, we'll be keeping all of those cues on our radar, domestic as well as internationally. But shifting focus once again back to the markets, and on the technical front, we've got Mr. Rudra Murthy, BV of Vachna Investments, joining us on the show. Rudra, hi, good to be speaking with you. And 24,400 is a level that we've held on to on Monday. Give us a sense of what the upside here could look like, and on a cautious note, the support level that we should be watching out for.
Sneh, good evening. Thanks for having me in the show. See, markets have clearly held those levels of around 24,200 and above, and even FIIs have now started buying. I won't be surprised if we see a flurry of buying from FIIs, and at least now crude is in check, and then you also see VIX, which is in check, and even the dollar INR, if you get some more strength and support because of FII buying, I see this market heading towards the 24,800 to 25,000 on Nifty. It's a matter of time. Definitely market should go there. And now this 24,200 to 24,000 zone will act as a very strict support. So for me, 24,200 is the range on the lower side, which will act as a crucial support now. And yes, on the higher side, we should see targets of 24,800 to 25,000 on Nifty. And similarly, if you see levels on Bank Nifty, yes, we are headed towards 60,000 on Bank Nifty. But relatively, Nifty will do much better than Bank Nifty. And relatively, private banks will do much better than PSU banks. But keeping aside the overall market, that is Nifty and Bank Nifty, you have a lot of opportunity, sector specific and stock specific, especially reality as a sector, or even if you see platform stocks. So these are all certain select pockets where you have relative strength, and one should definitely look at being on the long side of the market. And I will use every dip as a buying opportunity. And once FII starts much bigger buying, you will see this market quickly headed towards the 24,800 to 25,000 zone.
What will drive the rally, Rudra, in your opinion?
So yes, it should be very selective, Harsh, and I won't be surprised if this rally is led by NBFCs, pharma, real estate, automobile. So these are a few sectors which is looking relatively stronger. And yes, now we are headed towards even the result season. You have to be very choosy in terms of the sector and stocks what you will be picking. It will be a selective group of stocks in specific pockets which I have now spoken, and these are certain areas where you can look at taking long position. And yes, even at current level, even though I see IT showing some relative strength, you have to be very stock specific even in sector like IT, and you have to be very choosy, like I won't touch PSU banks even here. IT, again, you have to be very selective. But then, yes, other areas, if you pick up something like, let us say, automobile, NBFC, select NBFCs, pharma. So these are all certain sectors which can definitely outperform.
Bank, Rudra, the kind of move that we've seen today, you believe sustainable one? And what does this open us up to in terms of levels on HDFC Bank in particular?
Yeah, see, for me, Harsh, I'm very clear. If you have to be long, I will first prefer in banks, especially private banks. And again, you have to be very selective. For me, ICICI Bank, HDFC Bank are relatively stronger when you compare that with Kotak Bank. And now you have got a clear breakout above levels of around 820 zone. So above 820, HDFC Bank has closed today. and that is a short-term breakout. And yes, this can take stock up till 875 to even 900. So I will be bullish on HDFC Bank. That will be my top pick when it comes to private bank. And larger private bank, definitely HDFC Bank has given that breakout today. Keeping a stop loss of around 810, I will look at targets of around 875 to 900 to come on HDFC Bank. Definitely today's close is very positive, and close above 815, 820 zone tells to me, yes, more steam is left, and you can see levels closer to 875 to 900 to come on HDFC Bank.
Okay, 875 to 900 on the upside for HDFC Bank. Rudra, before we let you go, lastly, also share with our viewers your stock-specific picks. You did talk to us about some sectors that look good, but what about some individual stock recommendations?
Yeah, Sneh, for me, platform stocks, the new age stocks looks very good. And it's a choice which I'm making. And even if you see the business updates which came from Nika, they're all very good. Chart patterns are so strong to me in this new age and platform stocks. So for me, delivery looks very, very strong. And I have been recommending this stock even before. But even at current market price, the risk reward looks very favorable. So I'll be a buyer in delivery at current market price, looking at targets of around 550, and then eventually 580, 600 can even come on delivery. Keep a stop loss of 500 for this long call. For me, Eternal is another stock which looks very strong. Stock consolidated between 240 to 260, 65 zone and gave a clear breakout above 265. Lot of steam is left out even from here to move up, and I won't be surprised to see Eternal to move towards that zone of 310 initially, and then 330, 350 is also possible in Eternal. Keeping a strict stop loss of 275, I will be a buyer in Eternal. So a buy on delivery and a buy on Eternal.
Rudra, thank you so much for coming in, giving us all of those views. Sets us up well with regard to the day of trade of Tuesday. What we'll do, viewers, is slip in a very short break. On the other side, we'll talk about a sector which has given a 9% plus return, near 10.
On the show today, diving deep into the real estate sector. Now, some of the reasons why we're doing that, Harsh has already mentioned the kind of stock move that we've seen over here. The sector return has been quite cheerful, 9% in the last 6 trading sessions alone. But other than that, we've also got another trigger. That's the Q1 updates that have come in from names like Sobha. You've got Max Estates that's come out with its update. On the other hand, you've got Ashiana Housing as well, along with a bunch more names who've come out with their Q1 update. So let's decode that and much more in terms of, first, how are the updates being read into, and secondly, where is this sector headed? Where are we in the real estate cycle? So much to cover. Let's welcome on board Mr. Vijay Agarwal of Equitas Capital, who's joined us. Vijay, hi, good to be speaking with you. First, give us your read-through on how you are looking at the sector broadly and how you've read into the Q1 update so far.
So, thanks for inviting me. I think real estate sector per se, if you see, last year also has done well in terms of pre-sales, collections. And current year, because we had a lot of launches which were in the last quarter of calendar CY25 and then this first quarter, and which has bumped up these pre-sale numbers. Like if you see Oberoi launched a project in Gurgaon, NCR basically, and which sold like a 50% of GTV sold in like 8 to 10 days. It's a big number, and it shows that there is a strong demand for good quality product in the market. See, there is another change which is happening, is that people are moving from unorganized to organized players and preferring to listed players while making a decision to buy a house. And that's why if you see, a broader market may not have grown in a big number, but the organized players have grown beyond the normal market growth. So if you see, that is also being reflected in the numbers, Q1 numbers of many players which is coming, and even we had a Q4 numbers also, were good numbers from the perspective of market conditions. So I see the developers who had delayed their launches in CY25 are all planning to launch now in CY26. And we should see a good growth in CY26 and FY27 from the sector perspective. The market is moving from affordable to premium, mid-premium and luxury segment. And this is also being translated into terms of increase in the value per square feet and improvement in EBITDA margins for all the players. So we will see a good EBITDA margins coming from these players and good growth numbers from the players.
How are you seeing pricing, Vijay, evolve? In any case, inventory was decent. Inventory levels continue to remain quite decent, but how much bandwidth is there on the pricing side of things?
So see, I think pricing will be an inflation protected pricing increase. You will see some micro markets where velocity is high, you may see a higher pricing. I don't want to go into each micro markets right now. I don't have those numbers, but broadly, you will not see like what we have seen in Gurgaon, like 8,000 to 15,000 rupees. That type of price rise you may not see. You may see a 5 to 10% price rise, and that can be sustained. Well, that's an inflation protection.
On account of this price rise, do you think this will have any impact on demand at all, especially on the premium luxury side?
Premium luxury side, 10% price doesn't make much difference. See, premium luxury is always people go behind the product, not on the price. We are seeing you have 50 crores, 100 crores apartments are being sold. The same guy can pay you a 55 crores, 110 crores. I don't think he will mind to pay you on that thing.
And
but the pricing
on that,
will impact on the lower side. See, where you have a 1 crore apartment and it suddenly becomes a 1.2 crores, 1.3 crores, definitely you will see a pressure on those markets, micro markets, where the price is substantially beyond 20%, 30%. We had seen like Hyderabad market when the price was 5,000 rupees and suddenly it became 8,000, 10,000 rupees. You had seen dip in the sales there in terms of number of units, square footage. But in terms of value, the dip was not there because you were selling the same product at double the price.
How is Vijay? If I can particularly call out the Bangalore market, and why do I call that out is because the kind of spike up that we've seen in pricing in Bangalore. Do you believe that the manner in which the price has moved, could that at all be a concern at this point of time? And I'm speaking even from an investor standpoint, those looking to make investments in the Bangalore market, whether in the real estate space or whether in the real estate players.
So I think on the micro market, I don't have a data right now in my handy data. But see, if the price rise is between 5 to 10% in that micro market and that's a growth, I think that's a absorbable growth price rise. If it is beyond that, then definitely you may see a little slump on the sales number. And probably once the price is established, that's the price in that micro market, then the sales will recover in that micro market. But generally, if you see the listed big players like they command a premium over the nearby price, market price. They will always command a 15-20% premium over the neighborhood small developers. So if it is in that range, probably that's not of a concern.
And Vijay, if you had to talk about the way the real estate cycle is shaping up right now, would you say that this little bit of an upcycle that we're seeing once again is strengthening? Would you say it is slowing, or would you say it's stabilizing?
See, it's a stabilizing market. If you see in terms of square footage or number of units, the numbers are stable numbers. The growth is coming from the price rise, premium, because your product is changing, product mix is changing. When you're selling affordable, now you are selling a premium, mid-premium and luxury. Definitely your per square feet realization is improved, and that is shown in your numbers. So I personally don't see a slowdown in the real estate cycle right now.
On On that note, Vijay, how much of an upside do you think is left? Where do you think we are placed in this cycle right now? Given that we saw a very big jump up post-COVID, then we've seen a slowdown and now things seem to be picking up steam again. Where would you say we are in this 5 to 7 year cycle?
So 5 to 7 year cycles, we are on a consolidation phase, and then the market should grow. And the real estate stock prices have corrected big way in last 6 to 8 months. So there will be a recovery on the counters. Different counters will behave differently. But hopefully the numbers, the counters which are delivering the numbers, they will recover faster than others. Some are laggards, some are not. So that will be depend how numbers are coming out, how the project launches, pipelines are there for each of the players.
Vijay, would you assess the pulse of the market through pre-sales? Would you value counters on the basis of pre-sales growth? Would you look at price to earnings? What's the better way for an investor to look at the real estate pack?
So real estate pack, I think always you have a different SOTP methodology. Probably you will look more on the DCF. See, pre-sales multiple becomes a misnomer many times. See, if you have a large project pipeline which is coming in next 1 year, 2 years, then the current year's pre-sale numbers may not be of that relevance. Like if you see Oberoi had a 5,000 crores pre-sale last year and he has already sold 8,000 crores in one project. How you will give a pre-sales number? I think it will be always the future DCF valuations of the ongoing and under construction projects. Basically, that's the ideal method for valuing this company, and they may have a growth premium going forward basis the platform is able to deliver the growth and all that. But there can be some platform premium which is coming there, and that's how analysts are valuing each of the counter.
So that's your take when it comes to pre-sales and the metric that you'd prefer. But Vijay, in terms of the kind of sharp run-up that we've seen in some of these names quite recently, do you believe the valuations are still justified, or do you believe that they've run up a little more than you'd be comfortable with?
On each of the counter, I had to really see the analyst valuations also, because we have a methodology to value the counters. And always across, any fund manager who is doing the investment, he also sees an analyst report, how analyst is valuing, what discount he has adopted and methodology. And there is a scientific method to while making a buy decision by all the funds. So if it is, he will also see that entry and exit pricing for himself. If he sees there is a growth, he will definitely enter, and that is what we are seeing in the buying spree by these funds. We are seeing a lot of action happening on the counters.
Any stocks we can talk about, Vijay, and your top preferences within the pack or the like?
I will avoid any questions on individual stocks. Sorry,
no worries.
My firm's policy doesn't allow me to talk on that way.
We understand. Thank you so much, though, Vijay, for coming in and speaking to us.
Thank you. Thanks for inviting.
Thank you. Viewers, completely timed out on this edition of Market Edge from Snehi. Myself, Ariana, puts the show together. Thanks so much for watching.